So wrapping up the month of May, where was the best place that you could have parked your dollars in terms of getting some type of growth on your investment or just dormant capital? If you've been following this series, I compare the Algo bot's performance over a multitude of different investments, and I compare how much growth they did in that time period. So for this particular video, we'll be going over the month of May. Without further ado, let's dive right in. Welcome, if you're new to the channel. My name is Matt Jimenez. I'm an entrepreneur who has worked with the greatest minds in finance over the last several years, and I'm here to pour into you guys everything that they've poured into me. In these videos, I like to track the performance of my own personal Fed account, which is on the lowest risk settings. And the reason I say that is because compared to other softwares that people are running that have higher risk settings, tend to do a lot better than I do. But again, mine is very steady growth, and I've had the lowest drawdowns that I've seen. But again, the more risk, the more reward. So now let's check out the month of May and how well I did. Here we have my FedBot account. And if we scroll down to the bottom, I like to highlight the month of May and what we did. So we did 3.48% in the month of May. And a large portion of that not being higher was us going into June in a drawdown of a trade that obviously turned profitable, but at the end of May, we missed out on all the swing to the upside in terms of that calendar time period. So 3.48%. Let's go see how Bitcoin did compared to this. So to the far left, this is my measuring tool. What I like to do is drop it on the month of May. So this is May 1st right here on the close of this candle. And then I will drag it over to the end of May, which is right here. And I will go ahead and plop this right there. So Bitcoin did a whopping 15.6%, which is amazing for a single month. And again, this is if you bought May 1st and held to the end of May, you would have experienced a 15% swing in your equity. Let's swing over to gold and see how well gold did or poor. Again, just grab my measuring tool, swing over to May 1st. Which is right here. And we will go to this candle close, drag and drop to May 31st. So that's May 31st. Gold did not even a full percent. It did 0.86%. What would be interesting to see, which I'll pull up right now, is how the Gold Digger bot did in comparison to actually holding gold. And if you don't know what the Gold Digger bot is, I made a video right here that just popped up. If you click that, you'll get a full-blown video on exactly what the gold bot is and how it works. But long story short, it just trades gold. So gold, if you were holding it, or if you're holding some type of derivative of gold, you probably only did 1%. But if we pull up the Gold Digger bot, so the month of May, we did 12.15%. Now, that is almost as good as Bitcoin. And again, this software, or rather this algorithm, has been doing exceptional this year. I'm actually quite impressed with its performance, and I'm probably getting more and more interested by the day to fund my own account and go ahead and track that live for you guys, and then also see how well it does across the board of a multitude of assets, considering it did almost as good as Bitcoin. All right, so now let's swing over and check how the S&P did. Again, this is a beast of an asset, considering it is completely funded by the Federal Reserve and making sure that the economy of the US looks good. Whether we're performing good or not, that's a different story. It used to be that the stock market reflected how well the economy is doing. Now it's completely decoupled, and the stock market reflects just the stock market, not actually how the overall economy is doing. Enough ramble, let's check the measurements. Okay, so this is May 1st right here. Now let's swing over to the end of May, right here. That's the end of May, and the S&P did 3.43%, very similar to my very conservative FedBot. So if you had invested in the S&P 500 in the start of May to the end of May, you would have done basically what my software did. Now let's go ahead and check the real estate market. Okay, so here is the VNQ Vanguard, and again, I like to bring this one up because last week, I covered a video where a gentleman asked, is the bot performance diminishing? And if so, it's probably going to be similar to the performance of REITs, which is real estate, but in derivative form, to put simply. And this one's pretty cool to see. So let's see how well REITs did in the month of May, considering that they did have a nice run up. All right, so here is May 1st. Let me go ahead and drop this there and go to the end of May. So this is the performance of REITs. It did 4.35%, which is just about 1% better than my super conservative FedBot once again. And I thought this was quite interesting because you had a massive run in REITs to the upside and it pulled back quite dramatic. But what saved it was that candle open on the 31st where it gapped up a bit and then closed a bit higher. So it recovered a bit of those gains that it had on the sell-off, which is very similar to my FedBot in terms of the performance. And again, it just shows how well the FedBot actually does in terms of being very conservative. Because again, this is a bit more of a conservative thought asset. And I find it quite interesting to compare the two of them. And just for the fun of it, let's go ahead and look at Jeff's FedBot account. This one, we'll just look at the month of May and see how well he did to see if he beat any of these, considering his settings are more aggressive than mine. So for the month of May, same thing. Even with his higher risk settings, he only did 3.7%. And again, the FedBot typically will end up taking probably the same trades. So at the end of May, we did experience a larger pullback in terms of a drawdown and trickled into the 1st of June, which the trades ended up closing out in the very 1st of June, which probably reflected in the underperformance. But overall, if you're having a 3% gain on your equity, I would consider that quite healthy returns, considering all the other things that you could be in with relative to other things risks. And I consider extremely good considering how passive of a nature it has to itself. Now, if you found this interesting and you want to diversify your portfolio, go ahead and hit the link in the description and you could be routed to the team to see if this is a good fit for you. If not, and you just thought this was entertaining, please leave me a like, comment, and or subscribe. And like always, my friends, peace.